correctly anticipated and priced in the 75 basis point hike that we've just seen from the Fed. What's changed, however, is the narrative. The Fed remains steadfastly hawkish, pursuing their goal of reducing inflation over the medium term. To that end, the dot plot has changed. Rates are going to remain higher for longer. The expectation of market participants is now that we are unlikely to see a reversal of the Fed to a more dovish stance well into 2023, if not 2024. The impact of this seems increasingly likely that the Fed is prepared to push the US economy into recession to pursue their goal of controlling inflation. The macro backdrop is undoubtedly challenging in the broadest sense for risk assets. However, within multi-asset portfolio construction, we need to consider where we can allocate our risk budgets to those segments, those sectors that we expect to offer potential outperformance given this macro backdrop. This would include, for example, moving or tilting away from duration-sensitive assets, away from discretionary exposures that rely on higher disposable income. We can also use differentiated instruments to meet our objectives, including elevated income. That might include certain derivatives used in a selective and appropriate way as a utility within the portfolio. In constructing any diversified multi-asset portfolio, our focus needs to be on the priority of objectives. For income-orientated portfolios, my starting point would always be to focus on those asset classes that offer us attractive natural yields to aid in the distribution of income. Within that, of course, we need to consider where we want to be within the credit spectrum, more towards high yield as less duration sensitive, more towards certain geographies depending on where we are in the economic cycle and given the macro backdrop. Equally, there are techniques that we deploy within portfolios to augment the distributable returns and the income features of, for example, equities, call overwriting being a case in point. Portfolio construction, of course, within multi-asset, we have many levers at our disposal. However, the core principles for me are ones of diversification in selecting the right underlying and combining them in a way that both manages the risk in the portfolio, but critically meets on a sustainable basis the income that we are targeting for our clients.